Welcome back to Morning Markets on Wednesday the 6th of July. Last evening we received the news that Chancellor Rishi Sunak, the Health Secretary and a number of junior government members resigned from the UK Prime Minister's cabinet within just minutes of one another, highlighting concern around the Prime Minister's values. The move comes 1 month after 40% of MPs expressed a vote of no confidence in their leader. Over the coming days we're going to get more clarity in terms of the next steps. However, in the first instance, we started to see the reformation in terms of filling those key cabinet roles. The current Secretary of State of Education will come in and take the role of Chancellor of the Exchequer, and Steve Barclay, current Chief of Staff, will step into the role of Health Secretary. Our new Chancellor faces a tough task at this point in time. His responsibilities include setting the annual budget, mapping out fiscal policy, and setting the inflation policy. Also responsibilities in terms of the Treasury's response to COVID-19. He's taken the reins from Sunak, who's been at the helm through the worst of the pandemic and has been integral in driving policy support. He's stepping in at a time where many of those targets feel out of reach. Inflation at a headline level is currently at 9.1%, so it's way beyond that 2% target, and it's expected to reach levels of around 11% later in the year. Technically, at present, Boris is immune from Conservative leadership challenge until June next year, having secured 59% of the confidence vote. However, he's still under immense pressure politically. There's also the potential that we could see levers pulled by Boris, which are politically popular, but could prove unhelpful in meeting inflation and public finance targets and objectives. What was the reaction? Well, major UK markets were actually closed by the time of the announcement. However, through the night we saw around a 1% weakness in terms of sterling against the euro and the dollar. In terms of the starting point, sterling was already at a weak level. It's depreciated around 10% since the beginning of this year. In terms of bonds, bond yields came in through the day yesterday, which I'll touch on in just a few minutes. But as we look this morning, bond yields have started to push back out. In equities, it's actually a positive start to the day for UK equities. Large cap and mid cap UK equities are up around 1.5% so far today. During trading hours, markets, which you can see on screen, were really sensitive to expectations of slowing US economic growth. At this point in time, there are numerous inputs which analysts are using to gauge the direction and the speed of the transition of economic growth. Yesterday, we received the GDP Now data, which is produced by the Atlanta Fed. This is not an official forecasting tool, but more of a running estimate of where real GDP growth is based on available economic data for the most recent quarter. The index up until now has been expecting around a 1% contraction in US economic growth in the second quarter. However, yesterday we received some reports around the manufacturing health, construction, personal consumption, which pointed to a softening of demand. Post the results, the model was revised to suggest a 2.1% contraction in the second quarter. As a result of slowing economic growth outlooks, investors retreated towards government bonds, which brought the yields down, which was positive for the price. But we also saw oil prices, which are sensitive to economic health and demand, fall some 10%. There were also challenges experienced by OPEC Plus in terms of increasing supply due to some of the lackluster demand and investment which they've seen in terms of increasing capacity there. But we also had the Norwegian offshore workers' strike, which was set to threaten around 130,000 barrels per day of output. However, that appears to have been resolved through the night. Thank you very much for watching. We look forward to bringing you up to date tomorrow here on Morning Markets.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.